I think the long-term rally still is intact, but a couple of weeks ago when the velocity of the stock market drop picked up, that was indicative of one of 14 rapid large corrections. Those are usually months-long events. And then after the collapse in money market yields, such as forward LIBOR, such as Fed funds futures, that's also telling us that it's going to be a rough few months ahead. But then when you look at the actions of pensions that are lining up to put money into credit once this event passes, it's a months-long event with a tough grind up, and we've seen that happen a number of times over the last decade.
Yeah, we just heard from Scott Cohn that Chicago's four pension funds are 23% funded, so they got to make that up somehow, especially with low rates. You also make the point, I think it's worth emphasizing, we have it on screen right now, that investment-grade corporate bond yields have fallen, which is the opposite of what happens in a crisis. Having said that, has the Federal Reserve made this crisis worse, Brian? Have they not done enough? Would you like to see them be more forceful? How would you analyze that?
Well, I think the Fed and the G7 made a policy mistake last week because they issued a message that said everything's on the table and we're going to be coordinated. And then the Fed went ahead by themselves and kind of did it half-heartedly when they were asked about anything other than than interest rate policy cuts. The chair said they hadn't discussed that yet. And investors didn't want to hear that. Investors wanted to hear that the Fed is ahead of this. And they clearly weren't. And that's what sent money market rates down even further. And so when that happens, and that happened in 98, it happened in 2011, happened in 2013, it happened last July. It takes time for the markets, especially the credit market, to get over that.
Okay, Vincent, let me bring you in on that. What could the Fed have done better in this case? And more to the point of what we're waiting to hear for this afternoon is, what role can fiscal policy play? You know, if we get announcement that a plan is in the works, it's being formed, it's targeted at really helping those hurt by coronavirus, do we need to cut rates to zero next week?
Well, that's pretty much what's priced in futures markets, or at least 75 basis points worth of policy ease. I think the problem with an intermediate move is that it looks a little panicky, and people immediately assume that the Fed knows something that we don't know, which is almost never the case. And so they probably could have used a little bit more time and then moved at a meeting have considered all the aspects of monetary policy, so they could have really gone all across the waterfront in terms of policy ease.
What is left for them to do now, Vincent? Because if they cut to zero, whether it's next week or by April, everyone looks at the situation and says, well, obviously the next thing they have to do if they have to ease any more ever again in the future is to buy bonds, buy some kind of assets. You saw the Eric Rosengren thing last week about maybe they need approval from Congress to buy a wider swath. What type of purchases should we be thinking about?
Well, the plain fact, if you do unconventional policy once, your expectation is that you'll do it again. They've lowered the hurdle before they move into the balance sheet. So they'll cut rates. The general advice is if you are worried about the zero lower bound to nominal interest rates, you should get there as quickly as you can, because the economy will have more time with policy easing while you're at zero. They'll do what they've done before in terms of scale and scope of their quantitative easing. Got to wonder, however, how effective it'll be. As you noted already, the 10-year Treasury is already quite low. Mortgage yields are quite low. Mortgage bankers are working at full capacity. Housing is actually the one cylinder still firing in the U.S. economy engine, for sure. So it's not obvious that working on the Treasuries and mortgage front would be particularly helpful.